gentlemen, good day and welcome to EID Parry India Q2FY26 earnings call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanjay Manyal from DAM Capital Advisors Limited. Thank you, and over to you, sir.
Hello everyone, and a warm welcome on behalf of DAM Capital to the Q2 FY26 earnings call of EID Parry. We thank EID Parry's management for giving us an opportunity to host this call. On the call today, we have Mr. Mudaya Murugappan, whole-time director and other senior management team of EID Parry. I hand over the call to the management for opening remarks, followed by question-answer session. Thank you, and over to you, sir.
Thanks, Sanjay, and good afternoon to everyone. I'll make a few opening remarks covering the global scenario as well as important Indian sugar scenario as well. Sorry, I'm getting an echo somewhere. Hello?
Yes, sir. Please go ahead now.
Yeah, okay. I'm going to start by covering the global scenario. The global sugar market is projected to remain in mild surplus through sugar year 25-26, primarily due to increased production in Brazil, India, and Thailand. Favorable weather has supported higher output in India, 50% above normal monsoon during October, while Brazil continues to crush aggressively with a sugar mix of 53%. Despite dry conditions affecting cane quality. However, risks to Brazilian output persist due to lower TRS and productivity losses due to adverse weather in 2025. According to S&P Platts, global sugar surplus is expected to reach 2.23 million metric tons in 25-26. Brazil's Petrobras' decision to lower the gasoline prices have also contributed to building raw sugar surplus and lowering of ethanol parity as well. However, with the prices trading below ethanol parity on a sustained basis, the mix is expected to shift back to ethanol during the remainder of the crush. White premium values are expected to trade in the range of $80 to $110. The hedging activity by Brazilian and Thai millers and positioning by hedge funds will also have a large impact in pricing and hope shaping of sugar S&Ds in ensuing quarters. I'll now cover the Indian scenario. In sugar year 24-25, India's net sugar production stood at 26.1 million metric tons. Gross was 29.6 and diversion to ethanol was 3.5 million metric tons. Domestic consumption was about 28.1 million metric tons and exports was just under a million metric tons. Closing stocks were to the tune of 5 million metric tons. In Q2, which is July to September 2025, India's monsoon brought mostly above normal rainfall, filling reservoirs and supporting agriculture. Sugarcane yields have improved across major states, with only minor setbacks from brief flooding in UP and Maharashtra. Sugarcane output on account of increased yields and crop is likely to move up by 15% at an all-India level for sugar year 26. With the sugar output expected to move up, and consumption marginally expected to move up to 28.5 million metric tons, it's very likely that sugar pricing may soften. Moreover, ethanol diversion, wherein grain-based feedstock now account for more than 70% of the awarded tenders, ethanol diversion will likely only account for 3.4 million metric tons, thereby putting the estimated closing stocks for sugar year 26 at a more than healthy 8 million metric tons level. Given these realities, it's very likely that the policymakers will consider greater than 1 million tons of exports, for which official notifications are awaited. The current situation presents an extremely challenging time for the industry. On this account, the industry continues to make very active representations to the policymakers on revision of MSP, increasing the blend percentage beyond 20% in the ethanol blending program, higher allocation towards sugarcane-based feedstock for ethanol, and on better pricing for sugarcane-based ethanol. Just last week, the government of Karnataka has declared an additional price of rupees 50 per metric ton of cane over and above our FRP to be borne by all sugar mills in the state on account of intense farmer agitations. This adds an additional burden to the industry which operates in the state. It will be important over the coming weeks to monitor the position taken by policymakers in response to the industry's various representations. I'll now hand over to my colleague Mr. Venkateshwarlu to take you through the operating and the financial metrics of our company for the last quarter.
Thank you, Muthu, and good afternoon to all the participants. It is a great pleasure to be part of the analyst call and to share the key information of the operational and financial performance of the company. I would like to share with you the key operating parameters of each of the segment. The crushing operations of Tamil Nadu unit, the Nelikkuppam and Puklur has been commenced during the quarter, and we crushed the two units are got operated about 64 days and 21 days as the case respectively. So as far as the crushing is concerned, we crushed about 3.66 lakhs metric tons compared to the corresponding quarter of the previous year was 5.62 lakhs metric tons. As far as the recovery is concerned, current quarter is the 7.97% against the 7.6% of the corresponding quarter of the previous year. As far as the sugar production is concerned, we produced about 27,000 metric tons of sugar during the quarter against the 42,000 metric tons of the corresponding quarter of the previous year. Cane cost, overall cane landed cost is 3,620 per metric ton as against 3,491 per metric ton of the corresponding quarter of the previous year. As far as the sugar segment is concerned, we have sold about 83,000 metric tons of sugar domestically. Compared to the corresponding quarter of the previous year, it was 93,000 metric tons. Sugar prices for the current quarter is 41 rupees 19 paisa per kg against the previous period 38 rupees 47 paisa. We carry the closing stock about 66,000 metric tons, valuing at 38 rupees 50 paisa at a COP level. The sugar segment achieved a turnover of 368 crores as against the 367 crores of the corresponding period of the previous year. All FRP paid on time to all the growers who have supplied the cane to us. As far as the consumer product group is concerned, we achieved a turnover of about 169 crores during the current quarter, registering a degrowth of 30% over the corresponding quarter of the previous year of 236 crores, mainly on account of restriction and release quota of the sweetener category and a lower realization and fall in market price of pulses compared to the corresponding quarter of the previous year. The cogen operations. As far as the cogen operation is concerned, we generated about 307 lakhs units as against 505 lakhs units in the corresponding period of the previous year. We exported about 168 lakhs units against the 233 lakhs units in the corresponding period of the previous year. The average power tariff for the current quarter is 4.04 per unit as against 3.94 unit in the corresponding period of the previous year. Revenue for the quarter was about 12 crores as against the previous year 15 crores in the corresponding period of the previous year. As far as the distillery operation is concerned, we sold about 409 lakhs liters, of which ENA is 170 lakhs liters and ethanol is 233 lakhs liters. The same corresponding previous period, we sold about 419 lakhs liters, of which ENA was 159 lakhs liters and 260 lakhs liters was the ethanol. As far as the price relation is concerned, we realized at 67 rupees 50 paisa per liter against previous year's realization of 64 rupees 45 paisa per liter. As far as the revenue is concerned, we achieved a turnover of 292 crores compared to the 281 crores during the corresponding period of the previous year. As far as the nutraceutical segment is concerned, Indian operations is achieved about 7.6 crores revenue as against the 7.25 crores in the corresponding quarter of the previous year. At the consolidated level of the nutraceutical business, including US Nutra operations, we achieved about 61 crores turnover as against the 37 crores in the corresponding quarter of the previous year. The refinery business. we produced about 2.21 lakhs metric tons of refined sugar against the previous period of 2.65 lakhs metric tons. Refined sugar sales for the quarter was 2.54 lakhs metric tons as against the 2.15 lakhs metric tons of the corresponding previous period. The revenue is about 1,168 crores for the current quarter. Corresponding to the previous quarter, it was about 1,117 crores. EBITDA for the current quarter is about 58 crores. Corresponding previous period, it was 29 crores. As far as the PBT is concerned, profit of 31.42 crores for the current quarter. Corresponding previous period, it was about 5.02 crores. As far as the long-term loans is concerned, it's a zero because the corresponding previous period it was about 200 crores. Short-term loans stood at 159 crores for the current quarter, and the same was corresponding previous period. It was about 179 crores. That's all as far as the EID Parry's results is concerned. Now, floor is open for the question.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use a handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The next question is from the line of Vaishnavi Gurung from Craving Alpha Wealth Fund. Please go ahead.
Hi, am I audible?
Yes,
ma'am.
Hello. Yeah, hi. Thank you for this opportunity. My first question is on the sugar segment. Considering the issues pertaining to sugar and ethanol, whether mix is changing from sugar to grain. So how do we approach this challenge? Do we anticipate oversupply of sugar or underutilization of our ethanol capacity?
Hi, Vaishnavi, this is Ashik here. Yes, the industry faces a challenge of overall higher ethanol capacities as evident from the recent data that flowed as part of the OMC bidding. Obviously, the country is facing excess capacity, but the excess capacity seems to be higher in grain-based distillery as compared to molasses-based. Having said that, the lower allocations on ethanol, especially in Karnataka, puts a strain on how we use our capacity utilization. Some of these volumes will shift to ENA and will be managed, but eventually we need a policy decision to alleviate the excess capacity situation. The government is also seized of the fact that there is excess capacity today. I'm sure there will be some work around the same. Thank you.
Thank you, sir. So one more question on the sugar and ethanol side again. This is more on the consumer business side, actually. So considering our key segment on standalone basis, the sugar and ethanol, which is currently facing the challenges, so do we see the consumer business as our leading growth segment going ahead?
Yeah, this is Balaji here, head the consumer business. The first half of the second quarter for the consumer business has been subdued due to reasons of lower release quota and because of the lower prevailing prices of dal, which were almost 30% lower than the previous year prices. I think as we go forward, the consumer business will be moving into a growth phase with larger release quotas coming to us in the third and fourth quarter. And with prices of staples expected to stabilize at a slightly higher level as we go forward.
Sir, if you can put a number to the growth for consumer business on year-on-year basis?
So we don't give guidance, forward guidance, Vaishnavi.
Okay, sir. Cool. I'll join back the queue.
Thank you very much. Participants who wish to ask a question may press star and 1 at this time. I repeat, participants who wish to ask a question may press star and 1 at this time. The next question is from the line of Sanjay Manyal from DAM Capital Advisors Limited. Please go ahead.
Hi, sir. So I have a few questions on the ethanol part. One is what kind of what we broadly understand for 20% blending levels, government has allocated approximately 1,100 crore liters of ethanol. What allocation have we got, and will we be able to utilize our capacity to the full? And if not, then is it like private OMCs also will we will get some allocation from them also?
We have got about 69% allocation of the bidding that we did on the OMC side. We do engage with private players also, both Nayara and Reliance, and our current position is we'll be able to deliver similar capacity utilization like last year, which is upward in the range of 90% plus, thanks to the combined allocation that we have been able to garner. We have a capacity of about 18 crore liters in a year. We will deliver about 17 crore liters, the current estimate.
Right, sir. And if you also can elaborate on given the fact that ethanol price hike has not come in last 2 years, what is your expectation on that, and what kind of margins have been there? Because I think FRP and sugarcane cost is continuously rising. So how the margins have over the last 2-3 years have shaped? Has it been too much of strain at this point in time, and how the EBITDA per liter sort of have moved? I believe downwards.
Yeah, the ecosystem changes continue to happen, as you guys would have seen in the news. So we recalibrate ourselves with every change that comes. On a last 3-year time frame, I think even in the last call, we said that we did make ethanol investments with a particular expectation on return on capital. I think that's got significantly impacted because of the changes in the government policy that's happened over the last couple of years. We expect the scenario to improve on the back of support from the government. We are very sure the government is fully seized of the matter. While the MSP has not come through, we are still positive on the ethanol pricing that the government will step in and address.
Right, sir. Thanks, sir. Thanks for all the answers.
Thank you.
Thank you very much. Reminder for participants to press star and 1 to ask a question. The next question is from the line of Gautam Dedia from Nalanda Securities. Please go ahead.
Yeah, hi. Just one question. On slide 17, you're talking about some channel consolidation in the pulses segment over the next 2 quarters. So can you just elaborate what is happening over there?
Yeah, so this is Balaji again over here. So what we are working on is, we have 2 channels right now, a separate set of teams selling sweeteners and non-sweeteners. So there is some rethinking on that, and there is a consolidation of this channel in terms of the team size and the channel partners. So because the channels are being merged and one set of channel members are going out, there is a correction that is being taken in terms of the whole numbers, and this will come back once this channel merger is complete.
So this won't affect the volume that we are selling, right?
Yeah, it won't in the long run. In the long run, and by the end of the year, the business will be back to its normal volume. But in the short run, there will be some correction that will happen, and that is what was highlighted, I guess.
So, Gautam, good question. Q3 definitely has a volume impact because we're going through this rationalization. Whilst we're doing this rationalization, we're also, strengthening our commercial terms in the market across the staple segment as well as the sweetener segment. And I think strengthening the commercial terms should also, keep our working capital in line with our intent to build a more efficient business model. We will see an impact in volumes for Q3. I think by the time we get into the Feb time frame, we should be back on track. These exercises can take some time. But
and what kind of...
do it now as the business is scaling, as opposed to do it much later, when the business is much larger.
So are we expecting any cost savings from this exercise also?
No. So this is more prudent and efficient business model construct. That's what we're expecting from this. See, this is a growth business. It's going to need investments in terms of A&P expenses, in terms of talent, and in terms of its scale up. So this business will have to be in an invest and a growth phase. So it would be unwise to start looking at. We'll be prudent on the way we manage costs, but the focus will be on the enablers for growth.
Okay. And just one more question. So you said the white premiums, you expect them to be in the range of $80 to $110 per ton. So at that level, do we break even at the refinery? Like, what is our break even point for, like, how does it translate from white premiums to refinery spread?
Yeah, good afternoon, Suresh Kannan here. So typically, re-export refineries need between $115 to $120 of white premium to break even on full cost basis. So currently, because of the supply surplus that's been explained by Muthu in the earlier part of the call, we have a big overhang on the supply side, which is resulting in white premiums being depressed because there's enough competition from the low quality whites coming out of several geographies.
Okay, thank you.
Thank you very much. The next question is from the line of Ritvik Sheth from One Up Fin. Please go ahead.
Yeah, hi. Good evening, sir. So just one question. So in your opening remarks, you mentioned that FRP prices have been increased by 50 rupees per ton in Tamil Nadu. Sir, what is the kind of crushing that we expect in FY26 from Tamil Nadu?
So, Ritvik, hi. Good to speak to you again. No, Government of Karnataka has announced an additional price over and above the FRPs that we're paying in the state. This is a development, actually. It's a development which is a week old. Actually, under a week old, it all transpired over the weekend. So we're just keeping you guys appraised of it because, of course, it impacts the industry at large. So this is a Karnataka issue.
Okay, Karnataka. Okay.
So we crush, last year we crushed about 22 lakh tons of cane in Karnataka. Ideally, we'll go a little higher this year.
Okay, but has this been implemented or it's still under consideration?
No, it's been implemented. It was implemented on the back of some intense agitation. So I think the industry has, we've had to go with this.
Got it. Okay. Okay, sir. Thank you, sir, and all the best.
Thank you. The next question is from the line of Vaishnavi Gurung from Craving Alpha Wealth Fund. Please go ahead.
Yeah, thank you for this opportunity again, sir. My question is a follow-up question on the impact of quarter 3 volume you mentioned. If you can explain that.
Sorry, can you ask the question again? It wasn't clear.
Yeah, am I audible now?
Yeah.
You just mentioned the impact of on quarter 3 volume. If you can explain that.
No, so that's the impact on the staples business, particularly on quarter 3 volumes, because we're taking up a channel correction exercise in our distribution channel. So I think that was what I was outlining. I wouldn't want to get into numbers. I mean, it's certainly a manageable impact. But all I can say is that we'll be back to regular clip in Q4.
Okay, so one more question on the ethanol side. You mentioned that you will be maintaining the capacity utilization as it was in the last year. So do we not expect the industry challenges to impact us?
We have been fortunate on the TN and AP side where we have got allocation in line with our expectation because the available industry capacities are lower in that. We have got impacted in Karnataka. Our allocation has been about 49%, but we can make it up with the ENA volumes. That's an opportunity in Karnataka. So overall, we'll be able to manage the distillery capacities.
Okay. That's it from my side. Thank you.
Thank you very much. The next question is from the line of Raja Banka, an individual investor. Please go ahead.
Hi. My question is, there is a drop in sugar sales volume from H125 to H126 by 12% due to drop in domestic relief order. However, our trade segments increased 19% and retail segment reduced by 34%. Why was that?
So I think the retail segment, as I outlined to you, is that within the organization, the allocation of release quantities to the retail business was lower on account of the corrections that the channel consolidation is happening. Second, on the retail business, we have exited certain non-value adding and non-profitable product sales, resulting in, that's why if you see the realization in retail would have been significantly higher. From 39 rupees of the previous year, we would have been up almost at about 42 rupees or so. So that the increase in realization is because we shifted the focus towards more value-added products, and we decided to drop some of these non-value-adding products, resulting in a lower sale from the sales. And hence you see that the sale of retail is lower than compared to the previous year. On trade, I'll just let Ashik answer on the trade segment growth that we have seen.
Trade and industry segment growth has been in line with our expectation. Whenever we see an opportunity in realization, if we get a better realization, we capitalize on the volumes, and that's the growth that you are seeing.
Thank you. That is it from my side.
Thank you very much. The next question is from the line of Atul Rastogi, an individual investor. Please go ahead.
Yeah, thanks for taking my question. My question is on nutraceutical segment, which has shown a sharp turnaround. So, could you just elaborate why this happened, and do you think this current level of EBITDA is sustainable?
So, hi. The nutraceutical segment, we had, an insurance claim which came through. If you look at our consolidated numbers, we have an insurance claim which came through on account of some, facility damage. We have a facility in Florida in the U.S. on account of damage last year in the hurricane. The insurance claim came through, so that is a one-off. So I don't, believe you will see this clip going forward. However, on the nutraceuticals front, since you brought it up, we've had some challenges in the recent past in the Indian operations wherein we lost our European certification. That is back. So the operations in India are slowly creeping up again. We will, maintain at these levels though. We don't have any plans for capacity addition. In the US, the Valenza business, which is our main asset on the Nutra front, we're looking, we've had a better Q2 than a Q1, and we're looking ahead to a stronger year. I think we've got some new product launches, and we've also strengthened the talent pool at Valenza to deliver a stronger business remit.
Okay, thanks.
Thank you very much. The next question is from the line of Ramakrishna Neti from Zen Wealth Management Services Limited. Please go ahead.
Hi, thank you. So I have a couple of questions on consumer group segment. So in your initial remarks, you were mentioning there were lower realizations of 30%. So I'm assuming it is on the pricing front. So is this across the categories or which product categories? And if you can also help us explain the backdrop for this lower realizations, and when do you expect them to stabilize? That is the first question. Second question is with respect to introduction of new product lines or product categories. Are you done, or you are planning to launch more categories in future? If you can take us through on that. And finally, if you can please lay out a 3 to 5 year strategy of this group, where do you want this segment with respect to overall contribution at the top line and bottom line? I'm not asking about guidance on numbers and all, but your thoughts as you're intending to take this particular segment grow in a big way. Thank you.
So, Ramakrishnan, I'll just cover the first point. The realizations are lower on account of dal prices being extremely subdued compared to an average of about 148, 150 rupees of the previous year. Dal prices this year have been at about 95 to 96 rupees, which is almost a 37 to 38% drop in the price. This is on account of a higher amount of import coming in and the government allowing a larger import on yellow peas coming into this country, thereby resulting in a lower price of dals across the country, and this is only in tur dal and urad dal. However, this dal segment accounts for nearly 65% of our total turnover, resulting in a total drop in realization for us as well. This drop is entirely due to market conditions and is not engineered in any way by us intentionally. The second point on NPD, I think there are plans to get into other product categories, obviously like any other consumer business would do. And since all NPD development processes are confidential, we won't be discussing it in this forum. But you can expect a series of NPD product launches over the next few years from the consumer products group.
So I'll just cover the last point on the broader outlook and. Just to take forward from what Balaji had articulated, we're in the business here of food FMCG, and I think that the intent is to grow this business further. It's a significant growth area that we see for the company. We have a strong brand, and we intend to leverage this as we grow. We're in the midst of this assessing our strategy. We started off with sweeteners, we got into the pulses segment. This is our second year in pulses. We've done a little bit of vertical integration. We've put some product development capability in place. We've expanded the field force. We're just now doing a strategy revisit or really an evaluation of where we stand and what our strategy needs to be going forward. We have certain product category areas which we are interested in. Convenient foods is very interesting to us. Snacking is very interesting to us. Apart from sweetener and pulses which we're already in, we're further validating our assumptions and our hypothesis in some of these categories. We do have a subject matter, an external subject matter expert who is working with us as we speak to put this together. This will take us perhaps a few more months, and I think as we jump into the back half of F26. We will begin an implementation phase of the new strategy, which will really, our aspiration continues to, significantly grow this business and exit this decade with, a good EBITDA percentage on this business. So I think that's how we are looking at it. I won't get into specifics, but I think certainly perhaps Q1, Q2 next year, you will start seeing us execute and implement towards a new strategy narrative, which we are in the process of putting together.
Sure. Thank you.
Thank you very much. The next question is from the line of Somnath Saha from B&K Securities India Private Limited. Please go ahead.
Thank you, sir, for the opportunity. Most of the questions have been answered. Can you help me with the numbers of ethanol production during the quarter from molasses-based versus grain-based?
Molasses and grain-based production.
Yes.
Yes, we're just getting you this data, Somnath.
Do you have any plans to grow in the grain or multi-feed distillery base as the focus? I mean, if you see the latest tender, it is from the grain-based ethanol. So what will be the going on strategy for your ethanol mix?
Let me address the first part of the question. Q2, about 84 lakh liters of maize-based ethanol has got produced on the overall volume of about 409 lakh liters of total sales.
Yes.
Can you ask the next question?
The next question is that
on any capacity addition on So Somnath, we don't have any imminent plans on any capacity addition. Let me give you a reality. There's about 2,000 crore liters of ethanol capacity, which is pretty much up and running in the country. And the recent bids that were received were only to the tune of, I think, little over 1,100 crores. There were some private bids as well, which takes the number to a total of just north of 1,300. So there's significant overcapacity in the country. We're actually geared now in India for a blend which is in the late 20s. in terms of percentage, but I think where we've landed is still a 20% blend. So I don't see the industry per se, adding too much capacity. Folks may be, thinking of augmenting, or creating a duality in their assets for grain as well as molasses, but I don't see too much capacity addition henceforth. There is significant overcapacity in this industry right now.
Exactly, sir. So out of this 582 KLPD currently we have, how much is the multi-feed distillery, sir?
120.
Is there any plan to get more distillery to multi-feed or convert them?
No, not as of yet. And we debated often, Somnath, but I think we're going to stay away from capex for some time. There isn't clarity on a sustainable policy framework as of yet.
Okay, thank you.
Thank you very much. The next question is from the line of Vaishnavi Gurung by Craving Alpha Wealth Fund. Please go ahead.
Sir, if you can please help me with the revenue distribution for sweetener versus non-sweetener in our consumer product segment.
Yeah. So in the total quarter two, I think about close to 35 to 40% is the non-sweetener revenue, and the balance comes from the sweetener revenue.
So just one more question. If you mentioned that the revenue for consumer products was subdued because of the lower price realization from pulse. So if we see consumer products as our growing segment, do we not plan to have a hedge in place for this?
Yeah, so I think the market downturn was characterized by a lot of policy in terms of allowing a larger imports coming into the market, and that was a difficult thing to hedge against because it's a market price that is down. It's not our price that is down, so the entire market was down. But however, there is a little bit of backward integration that is being planned in order to ensure that we hedge this to some extent as we go forward. So that's the hedging that we have in mind.
Yeah, also I think from a revenue, just a price realization on a per unit perspective, Vaishnavi, I think, a year ago, the same quarter, you were about 30% higher on a per unit basis realization, and that is down 30-35% from at that point in time. So obviously you will see your revenue dipping.
Okay, so we see better, stable prices going ahead for the consumer products in quarter 3 and 4.
I think from a pulses and segment, there will be, I think Q3 we're starting to see a little bit of better pricing. We expect that there's been the crop is a little lower in India this year, so we see some better pricing to hold on the pulses side.
Okay, sir. Thank you.
Thank you very much. Participants who wish to ask a question, please press star and 1. As there are no further questions, I would now like to hand the conference over to management for closing comments.
Yeah, thank you all for attending our Q2 earnings call. We look forward to interacting again in the subsequent quarter. Thank you.
Thank you very much. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.